Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Here's a question. So all the rules to trade options on stock are also then applicable to currency options. I guess we can both take this one, Nicole. Yes, you just need to understand if you've ever traded an index option, it's almost exactly like a plain old equity index option. And do you want to talk about the rules or the volatility rules, if you will, Nicole, looking at these?
To be honest, Steve, I know that I don't know that much about the volatility rules for the FX options. I know they're set quarterly based on some percentages, but that's really all I was totally familiar
I'm sorry,
with.
I didn't mean to tie you down with that one. No, I didn't. Yeah, they are set quarterly, but I just meant some guidelines. Do you think that it's very similar to trading an ETF or an equity option? You need to learn the nuances of it, but volatility is volatility. You just need to grasp the nuances, correct?
No, that's exactly right. I mean, you have a special case with the FX options. You have the interest rate differential because you're talking about two different countries, and each country has its own interest rate. So that's something that's specific to the FX options. You're not going to have that in equities or ETFs. You're going to have the interest rate, but also if that underlying pays a dividend. So again, it's a nuance. Another nuance that you need to be aware of, these are European as opposed to equities which are American style. So I can't stress this enough. I'm sure Steve would agree. Whatever it is you're trading, you need to become educated in whatever is going to affect your bottom line. And that specifically to me involves, when's the last day I can trade these options? When is expiration of these options? Because expiration is not always the third Friday, Saturday of the month, so like it used to be. Just whatever it is going to affect your ability to trade, you need to know about it.
Great point. And I think just understanding that you want to think of what I like to, when I got better at trading, is your plan B, not only how you can make money, but how you can lose it. So when we were talking about the reversion back to the mean, yeah, that may work, but not probably if you're trading a 4-day option. It's not going to work.
That's right.
So you need to give yourself some time, and you need to understand that things could go wrong. Obviously, we're going to hope that they go right, but active management of the trades really makes a lot of sense. We've seen the markets move dramatically, whether it's FX options. In fact, that's still happening. The dollar even sold off even today against most of the majors. But volatility is so important. So, Nicole, do you have, let me see if we can get any other questions here, because we still have a couple more moments.
Sure. Well, just while you're looking over the questions, I have a little anecdote that I hope people will understand. So let's say a stock's normal volatility is between 20 and 35. And so volatility on the high side, it gets to 35, so the market makers all say sold, right? They're going to sell options when the volatility is high because they're expecting it to go towards 20. Well, so now the volatility is 40, sold. Okay, now the volatility is 50, sold. So Steve, what do you do when the vol gets to 60?
Well, market makers yell sold, although I will tell you one thing, Nicole. Some really smart guy in the Amex once taught me. He called it the 79 rule. If volatility gets to 79, I know this doesn't make a heck of a lot of sense, but what he was trying to tell me is have a stop loss order for yourself. You're short a lot of vol at some number, you got to buy it back somewhere. That could be the ultimate top, but you got to watch out.
No, I agree. I mean, because the next thing is going to be all buy them because they have no more left to sell. They're getting killed on the values. Everything is going against them, and so they have to start buying it because they're wrong. And then that's the thing. Like Steve is saying, you have to have a stop out point. Whether it's a vol point, it's a price point, it's a time point, whatever it is, you need to come up with that point. And it's really best to come up with it before you make the trade because everyone's judgment gets clouded once you get in the middle of a trade.
That's a great point. It is a great point. And you know what, guys, for everyone that's here, I want you to understand that, you're obviously all interested in FX options. You should understand that there are relationships between these pairs. So they're not always going to hold true, but right now you can imagine that the Canadian dollar, which is the symbol CDD, and the Australian dollar, AUX, are going to trade a lot alike. And if you take a look at the volatilities, they are the two highest volatilities that we have at the ISE. And the reason is, and see if anybody can follow this, why do you think the Australian dollar and the Canadian dollar, at least right now, are trading a lot alike? Somebody, Nicole's going to know the answer to this, but I want somebody, one of the attendees, what do you think what's the similarity between the Canadian dollar and the Australian dollar? And this is helpful because you'll start to understand. Thank you. Junku said it's commodities. So yeah, commodity-based currencies are going to, at least in this trend, and Nicole, right, these things can change. At some point, commodity currencies may have a lower volatility, but over the last couple of years, commodities have been whipsawing around, and if that's the case, then these currency pairs are going to probably have higher volatilities. And if you're trading these, as Nicole pointed out, you want to know where the vols have been. That's not any guarantee of future prices, but I know I'm looking at the Australian dollar, traded at a 44 vol last year. Doesn't mean it's going to go to 44 ever again or in the short term, but that is probably the most volatile of the six that we trade. Nicole, didn't you do that? You probably looked at sectors if you were trading equity options and sort of had relative understanding of volatilities?
Oh, definitely. There's some terms for that. If you want to get fancy, you're talking about GARCH volatility for certain sectors, and you're trying to buy low volatility names versus high volatility names. But yeah, you just want to have an idea of what's going on around you. That's what I would call part of top-down analysis. What's the broader market doing? Because your stock is really not all that special. It's going to move with other things most of the time.
That's exactly right. That's exactly right. See if we can take another question or two. But Nicole, if people want to go and learn more about TradeKing, what's the best way to do it?
The best way is really to just open an account. Accounts are free. It takes a couple minutes. You just create a login and a password. And, if you decide to fund the account down the road and get started trading, that's great. If you don't, no worries. We're not going to charge you a minimum balance or a minimum activity fee or anything like that. And the best thing is you can use every feature of our website for free. So you really don't have anything to lose in getting started. And that includes access to the archives. We have our archives actually in two different parts of our site. We're going to be consolidating them soon. I just see a question here that I wanted to address. You don't need to be a TradeKing client to access the majority of the webinar archives. However, we do have an extensive library of other videos, and you would need to open an account. But like I said, that doesn't mean you have to decide to fund it if you're not ready to, and just something so that you can check it out, kick the tires a little, and make a decision, but use all our tools in the meantime.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.